All right, welcome to our week 3 lecture. And what I have for you guys today is some information about accounting for merchandising. And that's what you've been working on. And it's very relevant in accounting. What we have is we have also our first introduction to QuickBooks going on. And I did receive a few questions about that during the week. So if you still have any questions about it, let me know. What I've noticed is that it's a lot easier if you do sign up for the free trial QuickBooks. The link that I've been sending a couple of you, if I still have it here, it's https://qbo.intuit.com. And you have to start with the free trial, which is all you want to do because you don't want to pay for this. We're not using it for very long. It's just an introduction into it. But you also may need to put in a credit or debit card so that after the free trial is over, they know they can bill you. But by then, you can cancel it. I happen to have signed up for it, and it works out fine. It's really very reasonable per month if you find that you're using it. I don't know if it's less than $10 or something like that. I have QuickBooks off the shelf, full CD-ROM versions and cloud versions, but this particular version that I've given you is what our department has noticed aligns most well, or most properly, I should say, with our assignments and the screenshots that you'll see in your work. So that's the only reason I say I recommend it. I have no reason to want to discourage you if you have a friend or a coworker or on the job or whatever, have QuickBooks and you can use it. It's just that things might not look exactly the same. But remember, you're making accounting entries. There's lots of tutorials to get from A to B. If you're trying to make 2 entries and you're not sure on the version you have, just Google it. There's going to be hundreds of tutorials to show you how to do it. Rather than going with the free trial, I just mention it because the screenshots will look most similar. There's hundreds of versions of QuickBooks out there. And so any of those are acceptable, and almost any of them can get the job done. All right, we're making entries, we're looking at reports. That is the heart and soul of QuickBooks. It's the accounting system for non-accountants, really. So that's just my advice, a workaround. And again, any addition, I'm sure we'll do. Okay, so we've been looking at QuickBooks. Any questions so far? Remember, you can always email me with questions because sometimes I record these and most people are listening to just the recording. But we did see that QuickBooks can be very helpful. By now, I hope that we have some idea from the work that we've done on it. And merchandising is a big part of studying accounting. And the reason being is that we have quite a lot of retailers. You never say that you're not going to work for a retailer. You guess you can. But I said I'd never do taxes, and it ended up being probably the most common thing that I've done in accounting. So I have to say, for accountants, you may think you have something in mind. You may even have ended up in accounting through a degree in finance, like I did originally when I first started out before my master's in accounting. And you get awarded an opportunity that just sounds too nice to pass up. So merchandising, retailing, very popular. It's just the firms that purchase merchandise that's already available for sale. Okay, can you think of examples of that? That would be Target, Macy's, Penny's, Walmart, right? They're purchasing items that are already ready. They've been produced, they've been manufactured. They're buying them from a wholesaler most likely, and they're the ones that are going to put them on a nice display with all of their stylists and all of their mannequins and all of their magic, and make the store look warm and inviting, or make their website look warm and inviting, which is kind of the threat that retailers are dealing with right now. So they need to keep up with their online presence. But some people still like to touch and feel their clothing, their shoes, their tools. They want to actually go to the brick and mortar. So the retailers are those that do it online and on ground. And the accounting for it is a little different because all they're doing is providing that place for people to buy the merchandise. So they prep it a little bit. They might make the merchandise look a little nicer. They may have to iron some clothing, put in their stylists, bring in their experts, and then they sell it. And the idea is that they sell it, of course, for more than they paid for it. So there is a special type of accounting used for that. We also look at ethical considerations in Module 3, and I have a PowerPoint on the accounting for merchandising I will get to in a moment, and also a nice video. But let's not forget ethics, because I have to say ethics is probably the red herring that should have been discussed before the turn of the last century, or even should never have been neglected, I should say, because it didn't get the attention that it needed front and center until we had a crisis of one firm got in trouble, right? I don't even know who was first, Tyco, or one of them got in trouble. The next thing you know, we had Enron, WorldCom, and a few others. And we realized that ethical considerations, number one, were not being followed. Number two, a lot of people were afraid to come forward if they thought they saw something unethical in accounting. There weren't laws in place to punish those that claimed ignorance in high positions that should not have been able to claim ignorance. I did watch the Enron hearings, and there's a video on the story of Enron. I think I have it on my website at www.deborahtuohy.com, and the link gets changed once in a while, or you may have to Google it after that, but it appears on Netflix too sometimes. And it's really a big thrust of what we're doing now is trying to continue to really go drilling down into making sure that ethics is something that we teach as professors right out of the gate. We assumed or didn't notice or didn't care that firms were doing well, and yet the whole accounting profession was really put to the test and almost didn't recover. I don't know how close. I don't know how close they didn't come to not recovering. I know I was scared. I know other accountants were scared because there's so many good accountants out there. But by teaching ethics in every one of your accounting classes, and in a lot of your business classes, if you notice, making sure that we tell the students what you can do if you see another violation, if you see another Enron or a WorldCom, if you're afraid you're going to lose your job for speaking up and being a whistleblower. There are laws to protect us now. There is a path for how to handle these things in the policy manuals of all firms, and millions of dollars have been put into making sure that we can avoid, of course not eliminate, but avoid another horrible situation that we had back in the end of the 90s. We also have a good video in our classroom on the FASB codification. That's good to get a real start on the codification. I believe some people said the link may not have been working right. The codification is free. You can go to the codification site yourself. However, there is limited access to the robust information available on the site unless you subscribe. I do not recommend subscribing at this point. However, there are great definitions to everything that's involved in GAAP, and it's put together very well, very easy to understand. And also, the items that are on the codification site are found and tested on in most professional accounting designation examinations. So it's a really good time to get in there. So what we do also in our study of merchandising, and bear with me because I'm still getting over that cold, the last few days of it, I think. But if I'm a little difficult to understand, or if there's anything you don't understand, please let me know. But it is a little difficult to be a speaker when you have a cold, right? So, but this is such good stuff, we're going to plow through it. So we have, in the merchandising firm, we have very popular to have a multi-step income statement because we want to see gross profit, operating profit. We want to see subtotals for these categories that we may not care about in some operations. We have different formats. We have, you can see in your readings, and the multi-step income statement really puts in some good headings and footers that will help you. As we go into inventory a little more and the retailer, we want to keep track of our main formula, our basic inventory formula. And what is that? That is to take our beginning inventory plus items that were transferred in or purchased is equal to items that were transferred out or sold plus our ending balance. And you can rearrange that formula algebraically if needed to. There's also discounts involved when paying our suppliers, sometimes, not always, but we learn about those, so that it gets to the point where maybe we have an agreement with the wholesaler that we're going to put out the merchandise. Maybe if we pay for the merchandise within 30 days or less, we'll get a discount. And so there's where we learn about it this week on how to make the accounting entries for those discounts that are given to those that pay early when discounts are offered. Now on to some ratios, and ratios are excellent. There's some that apply particularly well to this week. There's hundreds of them. We'll go over a really popular one. We have the current ratio, which is our current assets divided by our current liabilities. Nice and clean, right? Everything that's current is 1 year or less. We have the quick ratio, which is a total of all of our cash and items that are very similar to cash, items that are easily converted into cash, divided by current liabilities. It's also known as the acid test. And then another popular ratio is the gross margin ratio. And it shows the relationship between sales and cost of goods sold. It is calculated by taking net sales minus cost of goods sold, and then you divide by net sales. Now I'm going to put you guys on screen share for a minute here because there's a video on QuickBooks. Let's see if this one is a good link. It's given to us. So let's see if that one's working. I'll know. If not, to give you guys any others that I have a bunch on my website too. So we won't worry about that. But let's try the one that's on our site. All right, adjust your volume or the screen size as needed, but let's make sure, let's see how this QuickBooks video is.
Today we are going to be using QuickBooks 2013. If you are on an earlier version, QuickBooks Online, or a Mac, that is fine. The information will be applicable, but many of the screens or locations on your software may be a little bit different, but the concepts are still the same. My name is Cindy Finkenbinder, and I'm a CPA. I have been in business for over 15 years here in Colorado. I specialize in multi-state, multi-business taxes, and currently have clients in 20 states. I'm a contributing author to Smart Business, Stupid Business by Diane Kennedy and Megan Hughes. Now, we do recommend that if you have QuickBooks 2011 or older, then you upgrade to the newest version. You're going to want to upgrade about every 2 to 3 years because Intuit stops supporting older versions about 3 to 4 years after their release. We're going to assume that you have already installed QuickBooks on your computer.
When she mentions that about updating and the support that Intuit has given, that's another reason that I took the version that we have, the free trial version, because if I ever need to access a brand new version of QuickBooks, I can go to that version that I kept that goes along with our textbook, and so it helps you guys that I can look into the same version as you. But also, I won't have to pay for another update, right? Because it's online. So I pay a monthly fee, and that's if you all notice, that's getting really common with Microsoft Office products too. So, all right, let's continue. I just wanted to stop and throw in my commentary on QuickBooks.
If you need to help in setting this up or installing it, please give us a call, and one of us, either myself or my husband Jared, can help you through the setup. This is a series of classes, including how to set up your system. If you will check our website, there is a listing of all of the classes, and these will also be updated as new versions come out. Keep in mind that the new version of QuickBooks, the 2014, will be coming out in October, so at this point you may want to wait for about a month before you get it. Now there are 3 ways to navigate in QuickBooks. You have the side view over here. This is the default when you first install QuickBooks. However, you can change this so that it's on the top like the older versions were. Now then, your current active icons will change on this depending on what you have chosen as my shortcut. There's also action choices. These are the ones down below. This also changes based on what data or links are being displayed. This can all be closed or hidden, so make sure that you do that, especially if you are used to an older version. Navigating in QuickBooks is very similar to any other Windows application. To get this type of view, you need to click on View on the top icon bar. To get into this, you need to click on View on the top icon bar, and this will help you set it up in the traditional way that QuickBooks was set up. So if you're upgrading from a prior version, this will be the easiest for you to quickly find things. On the menu bar, you can find all the commands that are available to you in the drop-down list. The navigation bar provides quick access to frequently used access of QuickBooks. You can customize this by adding to it or removing buttons that you no longer use, and you can even change the icons used. Customization is covered in one of our upcoming classes, so keep an eye on the website for those. You also have the icon bar. It's sort of blended into the navigation bar, so make sure that you catch this. The icon bar is over on the side of the navigation bar. The icon bar is an extension of the navigation bar, and this can also be customized based on what you use in your business. Now, the home page will normally be the first screen that you're going to see. This gives you a graphical workflow representation. This page will change depending on the preferences that you have set up. I want you to notice a couple of things about this page. First off, if you notice the arrows that run through here, remember that arrows always mean go this way or follow the path. This is very similar to in a parking lot, so make sure that you follow the arrows. Now, if you notice the arrow from Customer Invoice, or Create Invoice, which is right here, leads to Receive Payment, which then leads to Make a Deposit. Okay? Now, the most important button on this page is the Reconcile button over here. That is because this is the one little button that will help you keep track and in control of your cash flow, which is very important for any business. I have been in business for 15 years now, and I started working with QuickBooks with the DOS version. That means that if you have an older version of QuickBooks and you need to upgrade, but you can't because you're on such an old version, I can help you with getting it upgraded. Now, in all the years of working with small businesses, I have found that the most neglected button on the home screen is this Reconcile button. If you are too busy to reconcile your checkbook and credit cards once a month, then it's time to hire this out to either a bookkeeper or a virtual assistant. Now, the company snapshot was introduced in 2009. This is literally a snapshot of all your company information. This can be changed by adding widgets for information that you want to track all the time. This is probably one of the best features that they have ever added to QuickBooks because it allows you to have access to all of your trends and all of this stuff right from your page, right in the screen. The payment snapshot is for accounts receivable tracking. This includes payment status as well as at-a-glance accounts receivable aging reports. The customer snapshot is very handy. This gives you a historical customer information. It even includes things like the average days that it takes them to get you paid and their sales history. This is very handy for making sales calls. It's also really good for if you know that their average days to pay, in this case, is 58 days. That also means that that's going to take them longer to get you paid. So therefore, you want to make sure that you don't extend too much credit to them. As a business owner, you need to know enough about the accounting program being used to understand when a problem occurs. You don't necessarily have to know how to fix it, just that an error has occurred. The best way to do this is to learn to read your reports. We will cover reports extensively in the Reports and Budgets class, but I want to go over just the two most important ones right now. The balance sheet tells you what you own, your assets. It shows you what you own, what other people owe you, which is accounts receivable, and then what your business owes to other people, which is the liabilities, which are farther down on the report. The difference between these is the equity, or how much you have your net worth in the business. The total assets must equal the liabilities added to the equity, otherwise it's not in balance. What this is a snapshot of what happens in your business. Ideally, you should be able to pull the balance sheet for December 15th of 2008 at any time, and it will always be the same as the last time you looked at that report from that date. If it's not, you know you have a problem. The other report you should know about is the profit and loss statement. It shows the income and expenses for a given time period. Remember, this is a fluid statement and changes from day to day. You can choose to look at 1 day, 1 month, 1 quarter, 1 year, or even several years. Once a year has been closed and the tax is completed for that time period, you should put a closing date with a password on your file so you don't accidentally change something. You will find this under Preferences, which we will also be covering in the Preferences course. One of the most important things you can do is to make a backup of your file. The loss of accounting data is one of the main reasons for a small company going out of business. 7 out of 10 who lose their accounting data will be out of business 21 days after they have lost their data. Keep in mind, it takes an average of 21 days and $19,000 to recover only 20 megabytes of accounting data. Because of that, you really want to make sure you have a very good backup in place. Now then, to back it up, what you want to do is from File on the menu bar, you choose Save, Copy, or Backup. The older versions of QuickBooks has this in different locations, and sometimes it has been under the Utility menu, reached from the File menu. Choose the location that you're backing up to. That will bring you to this screen. I do not recommend backing up on the same computer's hard drive. All this does is put you in double jeopardy. There are tons of alternatives out there for backing up. You can back up online. We have a secure backup system. You can use a Windows home server or other in-house backup, and there are several others. You can use Carbonite, you can use a portable hard drive. Just make sure that you back up. However, be really cautious when you're using a thumb drive or a flash drive. The reason for that is those can be corrupted fairly easily, so you want to change that out on a regular basis. Just don't forget to back up. You will be very thankful for that when your computer goes down the day before payday or any other time. If you need help with backup solutions, please call us here and ask for my husband, Jared. He is really good with backup solutions, and he can help you with the best one for your business. Now, lists are the backbone of QuickBooks. Everything in QuickBooks has a list associated with it. You will have a client list, an item list, even message lists. Each of these holds the information that will be put on either a form or a register. Now
Okay, I'm going to pause her there because she does a lot of self-promotion, but it is in your classroom. Ignore the self-promotion. I wish we could edit that out, but she's got some really good foundational material in there. If we can just get past her marketing that she'd like to give us. So All right. Also, like I said, I have a bunch on my website at deborahchewy.com, although Cynthia's work is very good. All right. So what I want to do, lastly, is just go over some of the materials for retailers and just give you a little flavor on that. And we will go through, if you can still see my screen, we'll just go through some of the slides. And again, these are in your classroom, but they do follow along directly with our reading. All right, so merchandising. First off, we start with who are the other guys involved. Well, the other guys can be the service organizations, and they're selling their knowledge or their time. And an example of that can be you when you open your own accounting firm or work for an accounting firm. It can be law firms, if you do plumbing, if you do other services. You're not exactly selling a product. You're selling your expertise, your knowledge. Here's the merchandiser. Like we said, the merchandiser is obtaining the products from some wholesaler or manufacturer, and then they're getting it ready, prepping it if needed, and then selling it to consumers. Here's just a glance of some excerpts from an income statement for a retailer. And again, I said we like to see the cost of goods sold, as you see down here, our net sales. So we're arranging it a little differently than some other income statements. But coming up with our cost of goods sold, and then subtracting to see what is our gross profit. In other words, we want to see the goods by themselves without all the other expenses to see the gross profit that we're making on the sales that we have made. And that's important for a retailer to know how things look before the other expenses are deducted. Here's the cycle. We purchase inventory right here. Merchandise inventory, in this example, it's bicycles. We have credit sales, possibly. We have some cash sales, too. We have accounts receivable for those that have purchased things on credit, and that is the cycle. This formula we went over earlier, so it's just a good reminder. We have a couple of ways that we can track our inventory, and you're going to see both of these along the way, or even other versions. We have perpetual, periodic, very common. Perpetual is when the items are taken directly out of inventory at the moment of the sale. So it is an expensive and very accurate inventory system. The periodic system is just when we update at the end of the accounting cycle. And then some examples of some entries. These you can go over on your own, of course, but we're just showing where Z-Mart, one of our retailers, has purchased $1,200 of merchandise, and they paid cash. So we see on November 2nd, they've got more inventory, $1,200 to debit to inventory, which is an asset, and $1,200 less in cash, asset for asset. Here's an example of those trade discounts that we talked about. In this example, Z-Mart has a 30% discount, and this is not just for paying early, it's for actually ordering a certain amount. So if you order 1,000 units or more, then you get a discount of 30%. So here is how we come up with the invoice price. Here's where we talked about paying early. A lot of times companies will offer a discount for paying early. Why would that be? Well, usually it's just a very small discount, but some companies want to take advantage of that. They'll pay early, and then it increases the chance that you'll get paid. The longer that a debt is outstanding, research has shown, and I don't have the research in front of me, but research has shown, because I've been a loan officer and a collection agent, that the longer that a debt is not paid, the chance of non-repayment grows exponentially. And that is absolutely true in the real world. So let's try to get everyone to pay early, offer them a little discount, right? And it's going to pay off for you if you do it. And then these terms are used, which might seem new to you, that you'll need to know. And people will just say, okay, it's 210 net 30. Just knowing that 2 is the discount, 10 is the number of days that you can have it for. Otherwise, everything is due in 30 days. So here we are. We purchased something on November 2nd, and in this case, we didn't pay cash. We are going to be invoiced. It has those terms, the 210 net 30, as we see. Here's where the company pays it. Okay, but if you notice, they only had to pay $11.76. They took advantage of the $24 discount, and now their payables has been erased. And here's how the accounts look after. As you do your reading, be familiar with purchase return and allowances. Returns are a really huge topic in retailing. As you know, sometimes you buy merchandise that either is not appropriate in size and quality. Maybe the same day that you brought home that little hand vacuum, so did your spouse. Then you need to return one, whatever it is, damaged, undamaged. But returns is a big topic. And the reason also it's a big topic is because it happens often, it costs the firm money, and they must control it from an internal control standpoint very carefully. So we'll just see some entries for that. Again, these are in the classroom, so I'm going to skip past a bunch of these. Here is just showing our gross profit like we talked about. In this example, we have sales of $321,000. We subtract out discounts that we've given for $4,300. We also have to subtract out returns and allowances from our sales because we're the ones that had to take those back, to subtotal at net sales of $314,700. The next thing we do is we subtract out our cost of goods sold to come up with our gross profit, a very golden number to know, of $84,300. Sorry they put that in red too. It's a little misleading. They did make money. So we see that the sale of merchandise has these two components. There's revenue received in the form of an asset from a customer, something we received, and then recognition of the cost of merchandise sold to a customer. And then some more examples. I'd like you guys to take a look at returns and allowances outside of the scope of this handout because there is so much more involved from an accounting standpoint, from a management standpoint, to know about returns and allowances. Some examples here too. And the ratios that we talked about. So definitely take a look. I'm going to take you guys off screen sharing. Definitely take a look at returns and allowances and really just the ethical and internal control issues involved in returns. Very good discussion on that out there. And that is about everything that I wanted to cover with you guys today. I do appreciate you listening, and I'll post the recording in probably a couple of hours. And I'll see you, I check in every day, so I'll see you in the forums in just a few hours. All right, take care. Bye-bye.